All right, welcome to AP Comparative Government. I'm going to talk about the European Union today. The EU is our best example of a supranational organization. A supranational organization is one that integrates different states with different sovereignties into a larger body. By definition, a supranational organization requires a state to give up some of its sovereignty to a larger body, so they can be somewhat controversial. The EU is the example that I recommend using for any FRQs on the AP test. So, a supranational organization is an example of integration. Integration is a process that encourages states to pool their sovereignty together to gain political, economic, and social clout. So, smaller states could combine together and become more powerful, just as a bunch of sticks are harder to break if you put them all together. Integration binds states together with common policies and shared rules. Again, if you get an FRQ on the AP test about either integration or a supranational organization, your best example, your best piece of evidence is always going to be the EU. So let's talk about it a little bit. Now, the EU is the most recent permutation of different types of supranational organizations that have come before it, and some that still exist. First is the League of Nations. This was an attempt after World War I to try to put some sort of international rules in place to prevent a further conflict. Given that there was a World War II 20 years later, clearly it didn't work. Today we have the United Nations, the UN. Membership in the UN has grown from 1945 and 49 states to 193 in 2019. It's a voluntary organization, but its rules are binding once you're in. The entire basis of the UN is to, ideally, ensure collective action and peace. In theory, the most important function of the UN is to send collective military forces to a region if said region is experiencing unrest. Why don't we use it then as an example of a supranational organization? Well, the problem is it is ineffective often for one key reason. For the UN to take military action, all 5 members of what's called the Security Council, and these are 5 permanent states, must agree. These include the United States, France, Great Britain, China, and Russia. And the problem is because the United States and China/Russia often find themselves at odds in various parts of the globe, this has basically resulted in a de facto veto on any and all military actions that the UN has been able to take. A little bit more successful is the WTO, or the World Trade Organization, which was established in 1995. Essentially, it's supposed to regulate world trade, and it's been somewhat successful in that. It serves as a forum for arbitrating disputes and enforcing international trade agreements. It has 159 members. Russia was finally admitted in 2012. And its application process can be stringent. It takes up to 5 years. Likewise, the World Bank is an economic institution. It was founded in 1944 primarily to rebuild Europe after World War II. Today, it focuses mostly on low and middle income countries. And it's also responsible, even though this doesn't make sense given the name, for a lot of global health initiatives. However, this too is limited. Why? Because only a small number of economically powerful countries get to pick the leadership of the World Bank. And therefore, it's often criticized for allowing the interests of those economically powerful states to dominate the bank. There's also a variety of regional organizations. Many of these are relics from the Cold War era that don't exist anymore. Some still do. There's the OAS, Organization of American States. There's the Arab League that still exists. The Organization for African Unity might gain power in future years, but right now it's largely ineffective. The Warsaw Pact and NATO are the 2 opposing institutions that developed during the Cold War. NATO, with Western nations allied with the United States. The Warsaw Pact was essentially a defensive agreement of communist bloc states led by the Soviet Union. Clearly, the Soviet Union no longer exists, so the Warsaw Pact no longer exists, while NATO still does. Now, these have grown over the last 70 years. Certainly, many of these have gotten more powerful, but none is as powerful as the European Union. And the European Union is not the original institution either. It was started with what was called the European Economic Community in 1957. Mainly, this was concerned with one goal and one goal only: the elimination of tariffs between all European nations. A tariff is a tax that you place on a good that is imported into your country. The idea behind a tariff is to make foreign goods more expensive so that you can protect some of your homegrown industries. The problem is tariffs tend to overwhelmingly reduce the efficacy of international trade. And as the world economy has become increasingly global, tariffs have been difficult to deal with because it can present problems for different nations who want to trade with each other. Now, in 1965, Europe transitioned from the EEC just to the EC, the European Community. This was an attempt to move European cooperation beyond mere economics. It was focused primarily on the use of atomic energy. Unfortunately, there were very quickly disagreements as to how much sovereignty different countries were willing to yield to the EC. Remember, sovereignty is the ability of the government to issue rules and exercise power within a geographic area. If you give up sovereignty, then you're allowing someone else power within your nation state. In 1991, the EU was founded. It was founded as a result of the collapse of the Soviet Union and new states in Eastern Europe. So this drove the creation of a new European supranational organization. The goal remained primarily to coordinate economic policy, with the hopes of later expanding into other areas like transportation. This led to the euro as common currency throughout much of Europe. Now, the EU was supposed to be based on three pillars: trade and economic matters, justice and home affairs, especially immigration, and common security policy. The EU has grown dramatically over the years from 6 initial members in 1957 to 28 in 2015. Clearly, this organization ran parallel to the EEC and EC for a long time. But, over the years, the introduction of different member states to the EU have raised questions as to just how large Europe wants its union to be. Turkey's application for full membership, it is still not a full member today, raised questions as to whether the EU was predominantly economic in nature, in which case the majority Muslim population of Turkey would be irrelevant, or whether its aim should be broader in some sense, in which case Turkey's human rights history might preclude its membership into the EU. Now, there are three important criteria the EU considers when analyzing an application for admission. One, a stable and functioning democratic regime. Two, a market-oriented economy. And three, a willingness to accept EU laws. Even if a country meets these criteria, however, many European nations believe that the EU has already expanded upon where it should. This is called enlargement fatigue, and it has reduced the likelihood that a new country will be admitted. This is particularly true for some of the older member nations, such as France, Germany, and Austria, who, generally speaking, are opposed to increasing the size of the European Union. That also has a lot to do with those two issues I talked about before: immigration and economics, which I'll come back to in just a moment. But let's first look at the organization of the EU as a whole. There are four key parts to the EU: the Commission, the Council of Ministers, the European Court of Justice, and the European Parliament. Of these, the Commission is by far the most important. The Commission has 27 members, one from each member country. The UK no longer gets a vote due to Brexit. Although the Commissioner is appointed by his or her home country, they're not supposed to favor their country's interests. These commissioners operate much like a supranational cabinet. So, like how a cabinet would function in a parliamentary regime like Great Britain. Now, the Council of Ministers is much more concerned with the needs of each country, and it's actually made up with the head of the government from each member state and its foreign minister. It has a president who serves full time and a 2.5 year term. The commission might propose legislation, but the council has to pass it. In that way, the two parts of the EU act as sort of like a bicameral legislature. When voting in the council, each country is assigned a number of votes in proportion to its share of the population. So Germany in the council gets more votes than Portugal, for example. The European Court of Justice is sort of like the Supreme Court of the EU. It interprets European law and it has the power of judicial review. Interestingly, and this is probably the main way, or one of the main ways that states yield sovereignty to the EU when they join it, the European Court of Justice can intervene in a state's policy, even if that policy does not technically on its face affect other European states. For example, back in 2011, the European Court of Justice ruled Great Britain could not give women drivers, who are statistically less of an accident risk, lower insurance premiums solely based on gender. It was able to do that even though that law didn't affect technically any other member states. Now, the last is the European Parliament. This is a bit of a misnomer. Contrary to its name, the EU Parliament doesn't have much legislative power. Parliament may attempt to pass amendments to legislation and may reject proposals, but the Council of Ministers can simply override it with a unanimous vote. Parliament tends to be much more interested in protecting the individual nations because Parliament members are elected directly by the people of their home country. It makes it a little bit more independent and a little bit transparent as well for that reason. So let's talk a little bit about policy making. The European Union does not actively engage in policy making in all areas, but there are three areas in which the EU takes an active role. The first is a single internal market. By and large, the EU has completely eliminated tariffs between its member states. So that's been very effective in coordinating the European economy. It is now also much easier to move goods between member states than it had been before. Plus, most professional licenses now also apply throughout Europe, except law licenses, so except attorneys. It's also been very successful in monetary policy. The EU is now the currency in every single EU state. I'm sorry, the euro is the currency in every single EU state, with one exception, Sweden. Great Britain was also an exception, but it's no longer in the EU, so we don't count that. The European Monetary Union has also, by and large, replaced state banks as the controllers of interest rates and the regulators of the economy. So if you're looking at really big picture stuff, trade, currency, interest rates, loans, generally speaking, the EU has been extremely successful in coordinating that policy across Europe. Agriculture is a different story. Agricultural policy has not gained as much ground as market or monetary policy, but there's still been improvements. The EU established farm subsidies to help farmers compete in the open market, and this has helped to consolidate smaller farms to make them more efficient. But it's not been without its headaches. Recent disputes, such as those between France and Spain over wine production, illustrate that there's a long way to go. Namely, France does not appreciate the fact that Spain has been successful in recent years at selling its wine at much cheaper prices than France has, which undercuts the French wine market, which, as you may have guessed, is substantial. So while the EU has been successful in reducing the barriers between states, by no means have those barriers been eliminated. The EU also has a lot of plans for the future. It has plans to provide for a common military defense, and these plans have been ramped up due to the recent Russian invasion of Ukraine, and for reforms in the judiciary, but those have not yet come to pass. Likewise, the EU remains extremely concerned with terrorism, though, again, major coordinated efforts have yet to be implemented. All right, let's talk about the Lisbon Treaty, because the Lisbon Treaty from December of 2007 definitely put the EU in a stronger position than it was prior to that. The key provisions are as follows. The Lisbon Treaty strengthened the European Parliament, putting it on more, not totally, but more equal footing with the EU Council. National parliaments as well now have more involvement in the European Union. A separation of roles between what the EU is supposed to do and what its member states are supposed to do is also much, much clearer. It now also allows for the idea of a withdrawal of a member state for the first time. And of course, Great Britain became the first European Union member state to leave the Union about a decade later. It also changed the term for the president from 6 months to the 2.5 years I mentioned before. Probably most importantly, it passed a Charter of Fundamental Rights. This was a charter that was supposed to promote individual liberties for all European citizens, and it's been marginally successful. The Lisbon Treaty went into effect in December of 2009. It took a couple of rounds to attempt to pass it. Many feared that the treaty would result in what's called a democratic deficit, which means that member states would lose too much power to a supranational organization. Interestingly, on the other hand, many supporters of EU felt that the treaty still lacked enough authority to hold its member states accountable. In the end, though, it remains to be seen how the Lisbon Treaty is going to continue to function in the wake of Brexit. And I don't have an answer yet for whether or not more member states, for example, are going to depart. They haven't in the years after Brexit, but that's not to suggest that setting that precedent won't be relevant in the years to come. Finally, just to kind of wrap up our discussion of the European Union, I want to talk about two broad concepts that always come into play. The EU has always had to balance a tension between economic liberalism, which wants free markets and little government restraint on trade between member countries, and economic nationalism, in which countries seek to protect their own economies. The biggest example of how this tension has functioned in the European Union is in 2010 in Greece. In Greece in 2010, the economy of that state nearly collapsed because the amount of debt that it had in comparison to its GDP was simply overwhelming. This served to highlight a tension between these two competing interests. Because while Greece wanted a bailout and wanted money to pay down some of its debts, or those debts, which were often to European banks, to have those debts forgiven, it was not interested, at least in first, at accepting the EU's demands for economic reform. In other words, Greece had to choose between economic liberalism and economic nationalism. Do you want the money? Do you want to become more incorporated in a European economy, in which case you must give up sovereignty? Or do you want economic nationalism? You can continue to do what you want, but you're not going to get the assistance that the EU is offering. In the end, in both 2010 and then again in 2015, because Greece's economy didn't fully recover, the EU forced Greece to accept severe austerity measures in exchange for millions of euros in bailout money. Even amongst other member states, these bailouts were controversial. Some European nations thought that they were necessary to preserve the overall health of Europe's economy. Others felt it was unfair to force wealthier nations to support the poorer ones. All of this gets to the heart of how much sovereignty states should surrender to supranational organizations such as the EU. In 2011, EU leaders discussed restructuring the economies of Greece, Portugal, and Ireland. Ultimately, with the exception of Greece, it didn't happen. But again, this highlights only one of the major problems with supranational organizations and economic issues. Because the interests of the supranational organization might be opposed to the interests of the state. And if that happens, whose interests get precedent? But above all, the biggest question remains, how much of an impact will Brexit have on the European economy? Will Britain's withdrawal herald other departures? So far, the answer is no. How will Britain fit its economy back into the EU without being a member state? So far, the answer is not so easily. But there are signs of improvements on the horizon.